On X today, I reached out to the community and just asked what could be useful for people to see at this time. 0x Chief said comparisons with past events in history that were also severe at the time, which always managed to be overcome. Much appreciated, my friend. Okay, let's have a look into Bitcoin's current price action. We can see that we had that big drop on basically the rare earth tariffs. But there was a little bit more to it than that. I covered that off in yesterday's video. Now we've seen, this is on a daily basis, we've seen that we've done really well. We've come up across the weekend, the first day of trading Monday, looking pretty good. Now, where have we seen something like this happen before? In order to understand this a little bit better, if on TradingView we go to forecasting and measurement tools and then down to date and price range, what we want to see is how long this actually took and what price it wiped out. So it came down really hard, wiped out literally 12 days worth of value. Now what we want to do is to try and find this kind of pattern inside Bitcoin's price action. Hence, looking into price action, if we just scoot out a little bit, one thing that we can do here, just hold control down and click and you can drag that. It kind of copies it. Now, did we see anything here? Well, that's a big down, but it didn't wipe out a lot of days. They were already wiped out here. So what about here? No, not really. Now, we're looking for a big drop, at least a 12-day drop. So what we expect is it's gone up and then it's dropped back 12 days. I'll just give you another look at that. So it's gone up and dropped quickly. It's trying to make a bit of a decision, go up, go down, decided to go down. So we're looking for that kind of pattern. We're not seeing anything so far. Okay, let's look back. We're all in the bull market, so the yellow is just the yellow band of the bull market. Is this a sell-off? Well, yes, it's a sell-off, but it doesn't approximate what we were looking at because we had something like this and it came down hard. Is this one, this guy, it did recover. So are we looking at something like this? Well, potentially. We've just got to keep our eyes on it. Now, this particular drop down was a little bit more, but it's not really that comparative. What about that one? Not so much. What about this one? Not so much. One of the things that I hope you're seeing here is the price is always moving in a wave. It's always moving up and down. When you understand this, it's an absolute game changer. So price moves up, retraces back to a base. Price moves up, and you can count these tips if you like, the wicks, and moves back. It's basically what's happening is the top end of town is always trying to liquidate the longs and the shorts. And if you've ever noticed, the price can come down and then reverse. All of this is about the concept that you've got leverage traders on both sides that the institutions hunt for. They literally do hunt for them. And just when the longs think that they've got a break, think that there's going to be a breakout, there's a breakdown, a big sweep of action. Okay, let's keep on going. So we're looking for a bit of an arc and a drop. What about this guy? Nearly, not quite. Okay, what about this one? This is looking a little bit more in line with what we had. We had a big push up and then a reduction. It's kind of a different pattern, but you get the idea. Now, what followed that? A couple of days. Now, this is actually looking pretty interesting. So we had a couple of days of basing, and then what did we see here? A bit of an up day, then weakness, then that sweep, and then things got going. Now, could that occur? Absolutely, it could occur. Now, let's just clone this. So basically click and hold the control key down. So let's have a look at this one. Yeah, it's kind of getting there in a way. This is kind of looking a little bit that way. So we can see a lot of basing action, and this is a much weaker pattern, isn't it? This one was quite strong. This one is already failing. Now, where is it failing to? It wants to sweep as many days out of the chart as it possibly can. What typically happens is most people are attracted into the market when this happens, and when this happens and this happens, they get thrown out of the market. You literally almost have to invert your thinking. It does take a bit of time, but it is possible. Okay, let's just clone this guy again. Now, what are we looking at here? Well, this is kind of interesting. It did go up, 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 and it's got a little bit of a different pattern. It's a longer pattern, but boy, oh boy, when this one broke, did it break or what? Look at this sweep here. How much did it sweep? Well, it swept quite a lot. I think we're going to have to go back in history for this one. Okay, now what is this telling you? And this is actually telling you something really, really important. When you see a sell-off, that's the market makers sweeping liquidity. Now, not all market makers sweep liquidity, but they do tend to do so. So when you see these spikes down, what you're seeing is a clearing out of leveraged long positions. And when you look the other way, you're seeing a clearage of leveraged short positions. Now, these guys are not classic investors. So many people think investing is the way to go. Investing is never the way to go, really. Realistically, the institutions, they literally just inhabit the space between the bid and the ask spread. Now, what does that mean? They're always selling big volumes and just buying and selling, very close to price action. And if they can do something like this, they'll just push it down and they'll get the hell out of Doge. Okay, so it's looking pretty interesting, and we've discussed some interesting factors here. So this is the halving, so we're leaving the bull market, now we're going into consolidation. Is this appropriate price comparison? Well, actually, not really, because if we're doing price comparison in this particular area of consolidation, what's actually occurring is that everybody has virtually left the market. They've capitulated. There are no more sellers left. Now, does this create a valid comparison? Well, it can. It's all price action, isn't it? Yeah, not really. It's all emotional price action. And what about if we do it in here? Well, if we do that, this is the pitch blackness of the bear market, and you can see the bear market gets really wicked. If we lose support, we can go down hard, and this is the thing that you need to keep in mind. When you lose support in a bear market, it's ugly, really, really ugly. You need to manage your positions, and that opens a big discussion on how to manage a position inside a bear market. The first thing is structure. And the second thing is momentum. If you're hitting an area of structure and it's weakening, you have to pay a lot of attention to that. If it's strengthening, you also must ride that. Gains become concentrated in bear markets. So it's actually much easier to trade, believe it or not, in a bear market than it is in a bull market. Weird, but true. Now we're getting back into the bull market. Now, what are we seeing here? If we're on the cusp of a bear market, would we get some kind of retracement like this? Ooh, this is interesting. This is nearly 12 days. Not really realistically the same kind of pattern. That pattern was more up here like this. So we could be looking at that. Now, this, I'm not saying that we're on the verge of going into a bear market, and even if we were, it makes absolutely no difference to us. Institutions don't just pack up shop in a bear market and say, oh, JP Morgan calls all its clients, I'm sorry, there's a bear market, I'm closing your account. I'm laying off all of our staff and it's all over. No, only retail do that. It's really important to be an institution of one. And just please don't get sucked into all that retail hype and nonsense. Most of the people on social media who talk and they got a lot of followers. They don't actually understand what causes the markets to move at all, and that is a big nightmare. Now, what's an example of that? I posted this out just literally last night. And this particular thing just gives you an idea. There's so many conspiracy theories inside the crypto market. Oh, Binance brought down crypto. The CZ actually saved crypto, people. He's saved crypto so many times. He doesn't get any credit for it. But, hey, people will be people. Anyway, Binance, you can see Binance Coin. People were having a go at Binance Coin. They were saying, oh, this was a manufactured crash. Actually, it was no such thing whatsoever. Bitcoin is this gold line. Now, the gold line, you can see it's just moving with the NASDAQ futures, the Russell futures, the S&P 500 futures, and the inverse of the VIX. Now, when the VIX spiked up, and boy, oh boy, did it spike, what we saw are the main markets, they all crashed. They crashed down. The NASDAQ futures crashed down. The Russell crashed. The Dow. Everything crashed. The S&P. Now, when they were crashing, Bitcoin held up reasonably well in comparison to what the major market indexes were doing. It was actually stronger. And, of course, it just couldn't withstand the gravity of the US market. Of course, we've got a rule for that. And what happened? Everything got pulled down. With the VIX was responsible. Now, a lot of people will say, oh no, Ken, the tweet from President Trump, that was responsible. If it wasn't the tweet from President Trump, it would have been something else. Don't worry about it. The VIX was basing, it was either going to just decay or do a rather nasty spike. Unfortunately, it spiked down. So the inverse VIX spiked down, but the real VIX spiked up like hell. And what was the cause? It caused all the markets, all the leverage inside the markets to unwind. This is intercorrelation 101, but if you listen to social media, you've got so many myths out there. Now, I did a bit of just a tweet here because I was pretty much sick of seeing so many people bash the hell out of Binance and not understand what they're talking about. And thank you to Tales from the Man Cave for retweeting this. You are a legend. And our ambassadors, what amazing people they are. I'd really like to help people to understand how the markets work from an institution of one stance. So therefore, I'm offering 5 scholarships to the Profiting Masterclass. This masterclass is an absolute game changer. In week 1, you'll learn how to think absolutely differently. And all you need to do to be considered is reach out to me directly on LinkedIn. Overcoming retail trade perfection is a very, very important thing to do. This is one of the reasons so many people get wrecked, because they're getting into the markets from a stance that is really fake. A lot of people who post their big percentage gainers do that occasionally, but not all the time. You need a system to do it consistently. And the only way that you can do it is by understanding intercorrelation and interconnection. For example, the VIX caused the spike inside the crypto market. If you saw the VIX, you were already prepared and you did your risk management before it spiked up. So understanding all the components of the cheat sheet. And if you're new, the cheat sheet is a free resource available from CTKSMethod.org. It helps you to understand how all the world's markets are moving as one. Remember, when the Dow came down, the NASDAQ, the S&P 500, the Russell came down, all of that would literally through the pressure on Bitcoin to come down. So predicting tops and bottoms in these things is really, really important. It's like mandatory. It's so important. In week 3, you'll look over my shoulder as I do trades in a very negative market where the VIX is spiking. I believe anybody can make money in a bull market, but making money in a bear market segment of a bull market, that is the VIX is coming up, just going long at spot, That is a superpower, and I want to teach you that superpower. It will help you to make money anytime. You know that in a bull market, things are going up. So you've got a lot of safety in a degree because you can make a wrong entry, but you can hold on for dear life and everything is good. But, you know, quite seriously, for the next couple of years, the markets are going to get insanely choppy. Therefore, learning how to make money in any kind of market, especially a down market, doing what you know to do, going long at spot, is a really good way to go. And week 4 is all about questions and answers. Market permission is something that is really important, and I go through different order types as well. If you would like to be considered for that particular scholarship, just reach out to me on X. You can directly message me, or please follow me, and you can drop a comment on the latest videos that I post over on LinkedIn as well. And thank you also to the people who have reached out. I want to really help as many people as possible. The link for LinkedIn is in the description of the video, and it's also right here. Just remember, Stanfield has 2 Ds. I like to stand in a field. Hey, why not? Okay, getting back to past sell-offs. What you see is if price is recovering, you're going to see that in the price action. And if it's failing, you're going to see that in the price action too. One of the most important things that you can ever do is not hope, pray, or wish. Save that for religion. It's really good there. But inside financial markets, please don't do it. Can you imagine going to your broker and the broker says, I'm praying, I'm hoping, I'm wishing that your portfolio will recover. And you would say, I'm going to change brokers because I don't think that's a professional thing to do. I think you should know what you're doing. Now, when we look here, this is a doozy. This particular one is really good. I think this is something because of that big candle wick down. Now, I always refer to these as intention spikes. Now, what did it mean and what does it mean? I'm a fairly big trader, so when I put some order into the market, I can move the order book around. Now, what does that mean? It means that if I want to sell a position, if there are not enough buyers and I sell at market because some technical condition has been checked, and then I do a market sell order or a market stop, and that's a way that you can protect yourself if you wish, or you can just sell it at a limit order. But you've got to be careful because some limit orders will not get filled, and that's what can happen in these type of events. So just something to bear in mind. What we saw here is when the order book is very light, it means that you'll get these wicks down. It's not quite what a lot of people think, and I think that's a really good thing to explain to you. Because I've been inside financial markets for nearly 40 years, I can explain things to you in a way that other people simply couldn't. Not because they're not smart or anything, because they've just not been there for as long as I have. So that could be something that you could benefit from as well. So if you're just a fresh viewer to the channel, please just smash that subscribe button and drop a like if you would like. And if you would like me to explain something, please do so, and you don't have to be a new subscriber to do that. Our beloved CTKS Global family, if you would like me to go through something, I'm very happy to do it. I kind of like these just very off-the-cuff videos. It kind of reminds me of what we used to do in the old days. Now, you can see this intention spike. This is order book thinness. This is weakness inside market structure, and that got filled. So just be aware that even though we can wobble around, see it got tapped again, just be aware that if we start to lose any particular level of support, we could go lower than those spikes. Now, this is always on, and the VIX, I'm talking about current market events, not this. Current market events, the VIX is doing this. It spiked up like hell. It's going to retrace because you definitely get these big spikes, retracement, and then it makes a decision. Are you going to come down? Are you going to keep on going up? that is often controlled by the big end of town. And the big end of town is not going to send you a memo, and you're not going to read it in the Wall Street Journal either. They're going to show you in the chart. It's all about strengthening and weakening. If price is weakening, beware. If it's strengthening, beware. You have to flip on a dime. Literally, you have to say, and you have to look at price action. Price action is always moving in a wave. Now, what typically happens, a big shakeout like this will recover, people will get pulled in at this time, and then they'll shake them out again. Now, this is a really nasty thing to be a part of. And inside the Profiting Masterclass, I show you how to completely bypass it. I was not adversely affected by the drop-off recently because I saw what was happening, and I was doing something called active trading. And I discuss active trading in the Profiting Masterclass. What is important here is there are skills that don't leave you decimated. A lot of people say education is expensive, but when you get handed the bill for not knowing, that is way, way, way more expensive. Okay, let's go back in time. Now remember, this is all a bull market. Look at this. This price variability is nuts. And what you will often find, there are a lot of people out there, oh, this one looks good. There are a lot of people and they'll just have a bull market philosophy. Oh, everything is fine. You know, diamond hands. And while your account and your portfolio bleeds to absolute death. Instead, you want to look at momentum, intercorrelation, market structure. Getting back to Chief's comment, this is all about comparisons with past events in history that were severe. Now, what we're looking at is order book weakness. So these tails are order book weakness. A lot of sellers pushing down, just taking any price that they can get, and because they're so thin, they get snapped right back up again. Notice the behavior here. So this wiped out about 24 days. Similar kind of pattern, not exactly the same, but this is the thing with price. It will never be the same. What you've just got to keep your eyes on is structure, momentum, intercorrelation. Now, what we saw was a bit of a basing, and then it started to fail, started to sweep lower. It will always, the market will always try to take the longs out of the market and the shorts out of the market. The market is literally trying to educate longs and shorts perpetually. Stop doing it, but nobody gets the memo. And some people become really, really good at it, and that's terrific, but you've got to be careful. If you don't know intercorrelation, if you don't know how the VIX impacts your chart, you don't know the rules of crypto, for example, Bitcoin dictates the fate of the alts, all of those kind of things, please don't touch leverage. You're going to get crushed. It's also really important to understand when a trend is strengthening and when it's weakening. There's a lot of ways to tell when a trend is weakening, and it should obey. Like a lot of people, when they look at a chart, they'll just say, I'm looking at this, I'm looking at that. We actually mark up our charts through 2 levels of standard certification. If you can mark it up visibly like this, you're not doing standards, you're doing hopeful and wishful thinking, which is pretty much the foundation of TA, apart from the CTKS method, which is no wishing, no hoping, no praying, just the stats, just reality. And why is reality important? If you're getting structural violations or structural overshooting because of thin order books, you have to pay a lot of attention because momentum could be just gearing up for negative downside potential. But as soon as things change, you have to be willing and able to swap your position to the upside. So when you look at this, you look at price action as just something that moves in a wave. It doesn't matter if it's a bull market, a bear market, it's irrelevant. You look at the patterns, they're just the same. The only difference is in a bear market, it can be a little bit wicked to the downside. But once you've got that all under control, once you understand what causes those spikes, and they do have a cause, you're looking pretty good. So that's the way that you can look at things as well. Okay, let's just turn that magnet off. Okay, so we're looking at 20 days. Did it come up? It's got a similar sort of thing, but a big bang came down, whipsawed around, and then what did it do? When everybody says, "Oh, it's over, it's over," yeah, it just went the other way. This is what price does, and you can just look at price action and you can tell what it's doing. And when you overlay structure, momentum, and intercorrelation, you get superpowers. And you'll learn all about that inside the Profiting Masterclass. The Profiting Masterclass is not cheap. It's $2,500, and that is because it is incredible. It is a license to print money. So if you would like to be considered for a scholarship, please reach out to me on LinkedIn. The Profiting Masterclass is literally, I spent a year putting it together. It's incredibly valuable information. Okay, we'll just do one more on this. We're in the yellow area, which means this is the bull market. So I'll just clone that down, and you can see these order books. They're really, really thin. If you've got a thin order book, it means that the big players will get whacked on their spread. So let's have a look. And that is important because if there's not a lot of liquidity inside the order book, all of these tails will get really choppy, as will price action. When you think about this, look at this. Maybe I'll do a range like this for you so that you can see. So when something comes up like literally, say 39%, it's a little bit more. I can pop this magnet on. So when you're looking at this, like literally 39%, from there, it's actually more than that. So if you were buying around there, and that is where people would buy because they get all hyped up and hyped in, and then it retraces like 26%, 27%. Sounds very much like what the alts were doing just recently. Thank God they rebounded. But that is thin order books across the crypto space. Please focus on the top 20, or better yet, even the cryptos just solely inside the service. You can make a mint from them. A lot of people will not be able to handle that drawdown, so they'll actually sell around these wicks. And that is the way, unfortunately, it works until it doesn't. Until you understand that things are changing, that you need to think in terms of price moving in a wave, just wiping out those tails all of the time. If you can think in terms of those triangles, you're going to do really, really well. And when you see trend changes, don't think to yourself, "Oh no, it can't happen." Of course it can happen. It is happening. Just think, it is happening. This is happening. It's happening. And if it's happening, you can ride it up. You don't always have to buy down. You can participate inside price action as well. What should be really, really clear is that price always moves in a wave and is always trying to sweep the longs out and sweeps the shorts out of the market continuously. If you can think in terms of tails, that is a superpower. But the real superpower is thinking in terms of momentum, of structure, and doing the cheat sheet. I hope this video has helped you out, and I hope you understand now that even though these events exist, they exist all the time. Just ignore them. This is part of price action. They're always going to recover. They're always going to go lower. They're always going to go higher. Just embrace price reality. If you have other questions that you would like me to take through like this, please let me know in the comments. And if you would like to be considered for the Profiting Masterclass, please reach out to me on this URL. Just DM me and let me know a little bit about yourself as well. It's always really nice. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.